Hey friends, what's up? 2026 is already 27% gone. Time flies when you're holy. So welcome back to the Safe Pill March AMA. Thanks everyone for tuning in. It's been a while since we last caught up, and great to see you guys. Everyone's back again, and I'm Ash, your host for today. Super excited to be here tonight, and really apologize that sorry, my internet is really broken today, so I will just have to keep my camera off just to maintain my audio quality. But no worries, I will meet you guys next time with the capybara face for sure.
Yeah.
Today we have
Lowers,
Sleepel.
lowers, Ash. Yeah.
No Ash
I love
today.
your avatar
We have
anyway, with the like big logo and t-shirt.
today we have Sleepel CEO Veronica and communications lead CJ joining us as usual. Thanks for being here. And all right, let's take a quick look at what we lined up for today. So we'll kick things off with some industry headlines, Miss Veronica and CGA, plus a little bit gossip as usual. Then we'll quickly walk through, all the key SafePal updates from this month. And finally, we'll be joined by our great guest speakers from Wallet Connect and AnyChain tonight to share their insights. All right, let's get started with part one, industry headlines. So, the first one, SEC approved on Wednesday Nasdaq's proposal to allow certain securities to trade in tokenized form. It's a significant milestone to integrate blockchain tech into U.S. equity markets. Would you like to share your insights, Veronica?
I mean, when these news came out, like my chat groups immediately blew up. A lot of people were talking about it. I
Mhm.
don't think it's just a regulatory update. It's actually an actual piece of concrete building towards the on-chain financial future that we are visioning, and it has actually arrived because previously it was only on paperwork, but right now it's actually a very significant updates towards actually building that and recognizing it, and also recognizing the current security regulatory framework includes what's needed for the on-chain financial world regulation. So I think that is a great signal, of course. Right now it's just a beginning. And like as a wallet founder, I'm not really focusing on how the back transformation is working on. I'm mostly watching where the assets flow because we are building a tool or a platform for future assets management, for digital assets, for all kinds of assets. So today we are seeing settlement layer on chain. But then what's next? Next, like once Russell 1000 stocks exist on chain, managing those assets would become critical, and it needs better on-chain infrastructure. So I think that's definitely not a competitive threat for us, but it's more like user base expanding. So it's even a more promising feature for teams and brands and companies and platforms like us. So right now, the first tokenized trades won't happen until Q3 this year. At the earliest. So let's wait patiently and see how it's going. But the critical thing is that SEC has confirmed that the existing law already covers the tokenized structures and the securities. No new legislation required. So that means the runway is quite clear. Then moving on next, it's about who moves the faster. So like let's stay put and watch. We should soon find out in Q3 and Q4 about this.
Yeah,
Mhm.
it's also nice to see the
Interesting.
impacts going on chain aside from what Veronica shared on the IRL changes.
Yeah.
We're starting to see more users embrace tokenized stocks as well, which is great, and commodities as well. I think last year alone we wouldn't have seen people talking about trading maybe oil prices and other
Mhm.
commodities on chain. But that's completely different today. So it's really amazing to see how fast the landscapes are evolving. Of course, it's not all a bit of roses. Objectively speaking, as a DeFi user as well, I think there's still other um, issues on chain that need to be tackled aside from what's happening IRL with the regulatory front. There's still yet to be seen how people are gonna be um, tackling the issue where stocks are not 24/7 tradable, but crypto is. So yet to see how that has been perfectly embraced on chain. And of course, there's still I think some liquidity slippage issues as well. But I think it'll be exciting to see how this gets smoothed out and addressed over time.
Yeah, also looking forward to see how even the crypto market is impacting the maybe the traditional stock market in a way. Let's move on to the next one. Next headline is about Genius Act. The U.S. Treasury has proposed new rules under the Genius Act, aiming to tighten oversight on stablecoin issuer, while allowing smaller players to remain under state-level regulations. So, like I just take it as the big state issuer under the maybe the country maybe with a tighter and maybe a stricter regulation, but maybe the smaller issuer has it's under maybe loosening rules. So yeah, is it another step forward with oversight, or you see it as a I don't know, like maybe like a backlash, or it's like a step backward into the competition between different issuers.
I think you made a great point, Ash, that you pointed out that it set up a dual track core structure.
Yeah.
Like issuers with less than $10 billion worth of outstanding can opt for state level instead of the full federal framework. So I think this indeed gives more flexibilities towards issuers and encourage for wider range of competitions, because now that's more players can join the game. The Genie Act wasn't really signed lately. It's been signed last July, and over the time we've been waiting for it to actually take shape. So this is actually the first concrete piece that we are seeing landing. So I think the bigger deal here is the stablecoin ecosystem legitimization. So I think that is a cornerstone of the future on-chain finance. So when issuers are formally regulated and required to build their AML programs, the credibilities of stablecoins would rise, and mainstream adoption would get easier, and mainstream penetration would get deeper. So that's directly good for the user growth of for all on-chain protocols and all on-chain or stablecoin related payment, finance, and on-chain yielding, etc. For all of the builders in these sectors, of course, including wallets. Right now, public has 60 days to comment, and final rules would be required by this year, July. With the full enforcement next January. So the clock is definitely ticking. So my suggestion to all of the builders, big shout out here. So better start aligning your compliance framework and postures right now, and do not wait until the last minute, because we are already seeing it coming, especially if you are doing payment and stablecoin issues. It's critical for you to keep on track to make sure it's aligned with the latest framework. So I think that is definitely a progression made, and just a matter of time that we wait for more details coming out.
Actually, I have a follow-up question on this. For example, we see the states are making very clearer regulation on stablecoins, but in other regions, it's a little bit like lay behind. So I was thinking in the future, how do you think like the gap between the early player and the and the followers on this on this regulation gap?
I think it's a matter of time. Go ahead.
Sorry, especially when you talk when you say, for example, we see the tokenized stocks, and also the the global liquidity on this. For example, if there's a smaller issuer in other regions, but whether a U.S. user is using it, will they under the protection of the state laws, or will it just will just be unprotected and vulnerable when there's a scam, or there's the bankrupt of the issuer from other regions.
I think you made a great point. I think there could be a transitional process of this with consumers in the states where haven't really released any framework or protection, a kind of a proposal for this, might be exposed to more risks. I think it could be a transitional process, but I think it's just a matter of time that each state would issue a similar structure or similar framework to make sure that it's fit under the umbrella of the current regulatory framework. So in my opinion, it could be a short-term problem, but will not be there in a longer term. For competitive landscape, right now we are already seeing early movers like applying for all of these, getting prepared for the compliance framework here. So I think it's only attracting more competitions across different players, because these people are already being in a space and getting ready and building up the muscle over the years, not just at the last moment. It's just a moment when the regulators sign the green lights for this one. So I think a lot of the players already stay put and then getting ready for that one. So competition is definitely going to be more fierce, and there could be issues that are exposed, like you mentioned, like for license holders in one state. What about they serve consumers in other states and then expose them to unnecessary risks, and then who these liabilities would be taken for? I think there would be a discussion process for this one, but we still need more details coming out from the Act.
Yeah.
I think two things that come about that's positive as well from developments on stablecoins is although the industry is maturing over time as well, and users are learning to be more discerning with their selection of assets as stablecoins. I think having established frameworks will help them discern overall without having to be too knowledgeable. So that's always a positive thing. Another thing I think on a surface level that we see that's different from, like, say maybe half a year, mid of last year and before, is we don't really see as much I think governments pushing CBDCs, for example, as before. And I think I see that as a positive sign, actually. It's because I think it's more because institutions and governments are starting to sort of truly embrace crypto adoption, instead of trying to bring fiat currencies on chain through CBDCs and such.
Mm-hmm. Okay, let's all right, moving on to next headline. Drip Protocol has released a detailed update following the April 1st exploit that resulted into over $285 million in losses. Turns out it's with a medium high confidence linked to a North Korean state affiliated threat group. Sorry. CJ, I know this situation has affected you personally. So, as someone with firsthand experience, we'd love to hear your take on this. And also, do you have any advice to, like, you want to share with the audience to help us stay safe?
Yeah, I think there's a lot to break down here. So I'll do my best to be as concise as possible. So obviously, I think like Ash mentioned, I think I'm a good representation that the risks in DeFi are all very true and real. And when we say, stuff that's very cliche, like, oh, don't invest more than you can afford to lose, it's very true, because I lost like a non-negligible amount of 5-figure assets around from the Drift exploit, right? And of course, does it hurt? It does. But I can still, life still goes on. I can still, function normally like a human being and go about my work. And that's because I think I managed my risk. Although I must say it was quite aggressive in terms of the asset choices and decisions to allocate to DeFi. It's something that I can accept personally and move on. And I think that should be the same for any retail users. If the amount you put into any DeFi protocol, no matter how good their reputation is, their track record, or how established it cannot be, if the next day you wake up in the morning and everything goes kaput because of an exploit or whatever reason, you have to be able to take it on the chin and keep moving forward. And if you can't sleep properly at night because of it, then you have not risk managed properly. that is, I think, on personal level for every user is what I would I wouldn't say I impose everyone, but I would strongly suggest. So I think for those that weren't personally affected, or when they see this, they're probably curious like the cause of it. And of course, I think the first instinct for everyone is just it's very easy to point fingers at the protocol itself for negligence. But there's actually a lot more that went on behind the scenes that I think everyone should really take note of, because I think there are a lot of important lessons that builders and users can take away from this situation. So firstly, I think it wasn't just a typical smart contract exploit or pure straight away a short stint. But as they dug deeper, they found that the main causes were actually it's quite scary to learn. Apparently, it was because of a 6-month social engineering efforts by North Koreans who actually posed as developers and builders, and they actually met these people in real life at conferences, and they basically posed as actual partners or trading firms, and they even allocated 1 million of their funds, to trade on this platform, integrate their products and really pose as a partner to build trust first, before managing to social engineer 2 employees apparently to download malware and compromise their private keys from there. And from them, they were able to inject a scam token, inflate the prices, and unfortunately, steal 280 million of the assets, which is almost everything from that from Drift protocol, which is which before this was unfortunately the leading perp DEX on Solana. So the sad thing was it didn't just affect Drift. It affected about 19 other DeFi protocols that all had exposure. So I was affected twice. I was affected on Drift and also on a cross lending platform, Project Zero, from that as well. So I think it was quite sad to see, because the size alone, one of the top 10 DeFi exports of all time, and I think impact on Solana, about 10% of the TVL getting affected. So definitely not a small scale here. So I think more or less people will be concerned, what can we take away from this? How can we protect ourselves as builders and users moving forward? I think there's a lot to look at here. So I'll try to be as concise. There were a lot of different issues that were pointed out that could have been done better. And to be fair to the project, I think I don't think I think it's actually quite difficult for any other protocol to not have fallen prey to what they have, to be fair. And I'm saying it's very objectively as someone that actually lost assets from the exploit. So there were things like durable nonsense, where the developers were able to sign, which the attackers were able to exploit a week later. So there was some flack about whether there should even be such a case, and I think there's a lot of arguments for back and forth. So I'm not going to delve deep into that. But I do think that 1 week, for the protocol to not have noticed even 1 week later, I think it shows that the vigilance of builders in general still have to be leveled up, in terms of checking. Although there were also arguments saying that it was due to blind signing, so it's difficult to see what kind of code there. But I think as builders, we do have to have a higher level of responsibility to actually check what stuff we're signing, because we're not just normal retail users, doing our own personal asset management. We're actually involving a lot of other asset holders, right? There were also flag about the multi-sig allocation. The attacker only had to compromise 2 out of 5 of the multi-sig to actually get the malicious contract approved, right? So I think the whole idea about multi-sig is to have a higher ratio of approvals to actually execute changes or on transactions or smart contracts. So I think the ratio there is also not so ideal, right? So it's not all negative, of course. While it's a really painful lesson, it's good to see that I think the ecosystem and also the other builders that are learning from it. And I think these are all things that we should strive towards and emulate as well. So I saw that there was a dashboard created after that, actually listed down the multi-sig ratios of various DeFi protocols. So users, before that, I think we looked into a code, and there was actually nothing wrong with the coding here. That it was more of a human vulnerability rather than code vulnerability, right? So users are now able to check on the dashboard, whether they're comfortable with accepting this kind of multi-sig ratio for the protocols they're using. Solana Foundation also launched a security standard. They called it Stride Security Standard, where it's basically a security standard, a structured program. So protocols have to go through OPSEC and security evaluations, and if they pass, Solana will be able to support them. The Solana Foundation will support them with consistent monitoring of their OPSEC and other things with grants and such. So I think there's a positive improvement from there. It's something I think all blockchain ecosystems should strive to adopt, because builders are builders, but it's better when the blockchain foundation actually works together with these builders to level up security standards. Although I must say this is still more on protecting on the coding level, it doesn't protect against human and social engineering, which is what happened here, right? The other thing that was also quite shocking is from all this tracing, it's like a really in-your-face sort of reminder that the threats of attackers are very real. They're not just they're your everyday scammers, that call you or send you messages pretending to recover assets and such. Those are very low level, very average. And then with people like this, very sophisticated, almost like a high level spy level sort of 007 kind of the things you see in spy movies, right? And it's very real threats. And it was quite shocking because after looking through and digging more with investigators like XPT, they actually revealed that there were quite a notable amount of protocols that have actually hired North Korean developers before, and some that recently left certain protocols. So there were other protocols that struggled to implement security mechanisms of that to warn people like we need to relook our code because we've had a North Korean working for us before. So it's all very real risks, and I think it also shows that people really need to level up the awareness and security checks for employees as well when hiring. So I think a lot of important takeaways there. A lot to break down, but I think on a high level, our coding, our offerings on chain have developed over time, but our security awareness and alertness also has to level up in general. Yeah.
Wow, there's a lot of things to digest. Yeah, very, very, very deep and very insightful. Okay, so let's switch gears. So this next story is a lot more fun. Just a day before announcing its shutdown, Meta backtracked on ending Horizon World VR after fans pushed back. So have you guys tried Horizon World? Actually, I only know I only know this game because I saw the Mark Zuckerberg meme. Like he's standing in front of the Eiffel Tower taking selfie. Yeah, so that's the only thing I know about this game.
Yeah, I was more. I mean, no flag towards Meta, but I was more surprised to learn that there was a large enough user base and that the user base cared enough to push back to actually force them to backtrack on their decision to discontinue, rather than the initial condition. Yeah, to discontinue, because they've been bleeding money out of this venture for quite a while actually.
Yeah, that's the power of community.
But I don't think that's great news, because it doesn't mean Meta is doubling down on it. It just means that Horizon World's entering maintenance mode, like the existing content stays, but there will be no new content coming. And the data is like, yes, we are seeing mobile downloads up 53% year over year. We are seeing 45 million in total, but total consumer spending on the app is just like 1.1 million something, like against over 70 billion in Reality Lab loses. So I think the number reports are actually painful to look at. So I think it's not a bad product. It's a good one. But it's a bad timing, because I think the infrastructure is not there yet, and we need to see a future when there's a platform that can actually give users own ownership in anything of it, like identity accounts, like virtual assets, virtual goods, and they need to have portable identity. They need to have real economic incentive to stay. These pieces are all missing. So I think it's a bad timing. We still need to wait for the infrastructure to arrive. So I think currently it's maintenance mode. I don't think it's going anywhere. We'll see.
Yeah. That's the thing. All the fine stories and headlines we have in March. Just to jump to before we jump to the next part, just quick shout out to the 2 ways to reach out to our support. First one, you can go to safepal.com/setmap, and second, you can go to the support shortcut in your SafePal app. Those are the only two official channels to find a SafePal team member to support you. Okay, so let's move on to the SafePal update from March. So first update, we integrate Polymarket's nasally in SafePal app. So yeah, prediction markets have been gaining a lot of traction lately, and this integration allows our users to enjoy a very seamless in-app experience, just like as same as you using Polymarket in their official website. So hope you guys all have fun predicting the future and maybe making some gains along the way. Yes, and next we also integrate Uniswap into SafePal Swap as one of the leading swap provider. Uniswap just brings more liquidity and efficient pricing, and we hope it could deliver a smooth and optimized experience for our user. And also we'll continue to bring more and upgrade your experience in future. And next, SafePal now supports 2 new chains, Lemon Chain and MST blockchain. SafePal is only getting more powerful as we continue expanding our multi-chain support. And if you want us to support any new chains, you can just go to our website, scroll down to the bottom, and you can just submit or just fill in the form, and we will see it. All right, next one is a big one. We've introduced Tron staking in partnership with XY Swap. So instead of leaving your TRX idle, you can now deposit and earn up to 10% APY directly in the SafePal app. Yeah, I think. Yeah, this is the last one.
This is just a quick add up on this one. I think this is pretty exciting. It's not you really building on top of any Tron burning ecosystem. It's built on the energy rental system, the economic system, the existing one that is circulating very healthily on chain. So I think this is a pretty well-established, well-built API product that worth looking at if you are ever holding TRX. So if you're ever holding TRX, I strongly recommend that you guys go check it out in the Earn tab in the wallet homepage, and to see discover more about it. And we're gonna have more products along the way, because this is part of our product roadmap of 2026. So that's a pretty exciting update for us, and hopefully you like it, and there will be more coming over.
Yeah. Thanks, Veronica. And finally, this one, very fun one to wrap up. So for April Fools, we dropped a little surprise. So we introduced SafePal MasterCard with a black cards design. So new users this month can register to get this exclusive card skin. And we've also heard a lot of some feedback from our OGs, from our existing users, who they said they wanted to, but unluckily this one is only exclusive for new users. But we also got many more creative and fun designs come in this month and next month. So just don't worry, there will be more surprise coming. Yeah. Yeah, that's the wraps. That's just wrap up this month's SafePal update. A huge thank you to Veronica for joining us. So we'll see you next
month. As always, pleasure. Yeah.
Yep. Okay. Appreciate you taking the time as always, Veronica.
Thank you. Looking forward. We'll stay tuned for the live stream continues.
Okay. And now, without further ado, let's welcome our amazing speaker to the stage. Fab, I think you mute yourself. So our first guest today is also
thanks for joining us, Fab.
Yeah,
good to be with you.
Yeah, so Fab is the wallet is running the wallet partnership for Wallet Connect, and maybe could you start by telling us a little bit about yourself and what you're working on at Wallet Connect, and also let me know if you want to switch on to the next slide or you want to especially do the demo, because StreamYard doesn't really support the videos in DAC, so I have to switch to another skin to do the demo. Just let me know. Just give me a sign. Okay.
Okay, cool.
Stage
Yeah,
is yours.
can do that. Let's see if we do the demo. But yeah, good to be with you. Hi CJ. Hi Ash. Joining from Wallet Connect. I look after wallet partnerships, work very closely with SafePal and other wallets part of the Wallet Connect network. Based in South Africa, originally from France, and been in crypto since 2016. Super exciting times to be in the space, and yeah, looking to showcase what we've built with SafePal recently. So let's go to the next slide. So payments have been something that's sort of been explored for a while with blockchain technology coming on board, and it's been I guess a long journey. It's been a long journey. We have basically payments available on blockchains, and people can send money to each other. But the next layer of integration and next layer of experience is that can you go to the merchants next door to you? Can you go and spend your hard-earned crypto? This is where Wallet Connect Pay comes in. So this is building on the Wallet Connect network and align with our mission. We want to make crypto easy. Want to make sure bring a great user experience to all the crypto holders across wallets. So this is a sort of wallet agnostic, chain agnostic protocol that we're launching. We had a WalletCon event in Cannes recently, and what you see here is one of the croissant bag that was purchased using our technology. So what you see here is a Ingenico terminal. So we're partnering with Ingenico. That's a global point of sale terminal manufacturer that has 40 million terminals worldwide. And then we're integrating the Wallet Connect technology, the kind of technology you're used to using when you connect to dApps, that QR code that you scan to connect. This is now integrated into point of sales and also available for online on e-commerce. The flow is very optimized for non-crypto native users. There's an in-wallet experience as opposed to the flow that you're familiar with Wallet Connect. Here's everything happens in the wallet. The user scans the QR code. We prepare the confirmation. We understand the user's tokens, and the user just needs to approve. We abstract the gas, and down the line, the merchants receive fiat. So merchants don't have to worry about crypto. They just need to enable a new payment methods. There's cards are well established. There's other payment methods all across. This is a crypto native payment alternative payment method that gives that leverages the greatness of blockchain technology with faster settlements and cheaper fees for the merchants. As an end user, once you use that and go purchase things online or in store, you also earn cash back to incentivize adoption. So yeah, we're really grateful to have SafePal on board. They're a design and launch partner. We're working very closely. They helped us make sure that the UX is spot on, and in the best cases, you can just tap a button and pay. And what we also demoed at WalletCon is a tap and pay, so that can sort of rival with the current card experience, and that's currently in R&D.
Cool.
We can do a quick demo if you manage, Ash.
Yeah, let's do the demo. Pay demo first,
yeah.
right?
Yeah.
Yeah, let's see demo. Let's do it
So
again.
that was a quick one. Yeah, 4x, but it takes a few seconds. And basically what happens is the merchant terminal displays a QR code, the wallet understands that QR code, and gives a model to confirm, and payment is on the way.
Wow, super easy. Okay, let's move back. Yeah, that's the demo we just saw, right? Okay.
I think another thing that's awesome about the way Wallet Connect builds their products is they always put a lot of effort. I think not just on chain but IRL as well. I saw a launch party. There was a lot of efforts to educate people on how to use it and guide them step by step. So I think that's not something that's easy to do and not something that every project aims to do. So Wallet Connect has always maintained that, which is why it's always been awesome working together.
Absolutely, yeah. We want to make crypto accessible and easy. The UX is paramount. Has to be simple for onboarding the next wave of non-crypto native users, and therefore we really focus on less clicks is more, and making sure that security is actually considered in the payment flow. You actually you don't have to enter your amount yourself. All that transaction is secured and approved, and all you need to do, it's also clearly shown to you. I mean, we talked about you touched on blind signing. This is an optimized flow where you see exactly what's going to happen and which amount you're going to transact on. So it's a much safer payment flow. The next announcement was Ton support. So Ton has been supported by SafePal for a while, but imagine a world where every single chain has a different way to connect your wallet, which Ton has, but that adds a lot of complexity for wallets, adds a lot of complexity for users. There's a security component where all of those protocols to connect need to be tested. So from a Wallet Connect perspective, we're trying to push our standard technology across chains, so you always have that same experience that you trust. So that's where the integration with Wallet Connect comes in. Now, SafePal can connect your wallet using the Wallet Connect QR code, and we also partnered with multiple Ton dApps like StoneFi, Storm, Ton Stakers, Didas, Tonko, Affluent. All of those support the protocol and make it easy and safe to access those dApps.
Cool. Do you want to check out let's do the Ton demo?
Let's do the Ton demo. Yeah.
Yeah, let's do it. Sorry, I think. Wait, I think I stuck here. Just wait for a minute. Okay, we're here.
Nice.
Nice. Okay. Checking out the Ton dApps. Scan. Super.
Awesome. And then what you saw, I guess, what we're doing as well is a verification of the domain. So that adds an extra layer of security where we tell you the StoneFi app and domain is verified.
Yeah, but I think one thing about the UI as well, a small detail but very important. They mentioned previously about blind signing as well. Users actually sort of know what they're signing. Very important for security. And I think a standard that all builders should strive towards for their products.
Cool. Cool. Actually, we prepared a few questions for you on top of what you share with us. So, so the first question, actually, you mentioned that Wallet Connect just hosted the WalletCon Cannes, right? So, do you want to share some of the highlights from the event?
Yeah, for sure. Yeah, we had a great event in France, in Cannes. where we invited a lot of our partners. Sadly, some of the SafePal people couldn't make it, but probably next time. It was a great event, and then we had about over 1,000 people joining throughout the day. We had demo booth and a merchandise booth where people could experiment the pay experience firsthand. So, using the SafePal wallet, using other wallets. We have about over 100 users purchasing items through the day. Very successful day of selling bags and merch. But also we had Trezor. Trezor was using our Ingenico powered or Wallet Connect Ingenico Wallet Connect powered Ingenico terminal, and they were selling Trezors. And an interesting fun fact is that it was quite a successful day, and then they asked us can they borrow the terminal and bring it to another conference where they were selling, because users were actually wanted to buy Trezors, but with crypto and stablecoins.
Wow, it's next time I think maybe SafePal can join, right? CJ.
Yeah. When the features rolled out to more regions and we have coinciding events, we're definitely gonna get. I'll definitely remind our partnerships team to reach out to Wallet Connect, see if we can sort of work up some terminals there to get it integrated.
Actually, it just reminds me because SafePal and Wallet Connect is having a pop-up booth in Hong Kong on I think April 25th. Should be I think the week after next week. So yeah, I think welcome everyone, if the audience are just in town, just drop by and try out Wallet Connect Pay and maybe the terminal. And I think SafePal Mastercard will also be available at that time. So try out Wallet Connect Pay and buy a croissant tote bag. Yeah, I always want. I saw the tote bag a few times on social media. So yeah, it's so nice. I also want to have one. Cool.
Yeah, kudos to our designer. It was quite a hit. Yeah.
Mm-hmm. Yeah, let's move on to next question. So, with integrations like SafePal, how do you see wallet brands accelerating crypto payments adoption?
Yeah, this is key for us, and that's what we're trying to do. I mean, as I said before, payments. A lot of people and companies and have been trying to do payments for a while. Ultimately, payments is a global thing, but with regional peculiarities. It's a compliant flow, which is different compared to DeFi. The Wallet Connect Pay payment flow is fully compliant. So with the help of wallets, we're able to reach out to end users and drive adoption. Wallets are key to bring adoption. We've got the two-sided marketplace. Merchants need to adopt it. Wallets need to adopt it, and ultimately end users, you and I, must decide to actually spend our crypto and stablecoin. So the brand is becoming more and more important because it gives you an indication of safety, of trust. So now ultimately, what we're seeing in the space is that we've got our existing network of wallets, and a lot of them are self-custodial, hard, DeFi. Some of them are like more intermediary with card programs, and we also have neobanks reaching out, and potentially also established banks saying, "Oh, well, can we also bring stablecoins on to our users and then enable payments?" So wallets like SafePal have a key role to play to bring that trust, to make sure that experience is simple and safe. I mean, I guess safety, simple is probably the number one thing, but close second is safety. The users must trust that what they're doing is basically on par with what they're doing in their daily life, paying with cards or in other ways.
Cool. Very interesting to know that. Yeah, let's move on to the next question. So looking ahead, Wallet Connect processed over over $400 billion in transaction volume last year, and also connecting more than 500 million users across this, I think 700 plus different brands wallets. So what key lessons from this scale are shaping your roadmap for 2026, especially, after a lot of announcements at WalletCon K?
Yes, I guess the short answer is payments. With Wallet Connect, we're quite uniquely positioned because we see what's happening on the institutional side. We work with wallets like Fireblocks, BitGo, Hextrust. So those are wallet as a service servicing institutional players, companies holding their treasury, and those are driving a lot of the volume. And then we work with retail wallets like SafePal. So that gives us a good overview of what's happening. And the main highlight from 2025 is the very rapid rise of stablecoin transfers. And a lot of this is driven by B2B payments. But what's interesting is that that B2B flow may actually drive merchant adoptions, because merchants will start having treasury on stablecoins on their treasury, and they'll start spending across the world to purchase goods, and then one way to acquire stablecoins is actually accept stablecoins as payments. So this is what we saw in 2025 is the rise of stablecoin volume, but also the rise of payments. So we got the top e-commerce platforms actually use Wallet Connect under the hood, and that's traffic that we can see, and that's growing rapidly. So there's definitely demand from users. We've also run reports and surveys around what's the next thing for users, and stablecoin crypto payments is quite high up. Being able to spend your crypto at the merchant near you, and I guess stablecoin is really the technology that makes it more palatable across the space. It's everyone understands $1 or €1 or other currencies, and then we say it's the digital version of that. They're like, okay, cool, that sounds good. And then on the merchant side as well, it's easier compared to saying, can you accept Bitcoin? Can you accept Ethereum? That sounds always quite complicated. Ultimately, Wallet Connect Pay will be cross-chain and accept any chains, any tokens. I think stablecoins under the hood can power that quite powerfully. And it's interesting as well that as I said, we're working with institutional wallets and retail, but they all use the same technology. So what we're seeing is the top dApps are Aave and Spark, and those are yield dApps where institutional players are looking for yield, but also you and I are looking for yield for the money that sits in our wallet, which in a traditional banking space is not as easy as in DeFi. You open a special account, but like having a yield on money that's stored in your wallet. Well, I mean, there are different ways to do that, obviously, but that's I think the next. That's what driving our roadmap. It says stablecoins are here, volumes is here. How do we make sure that it sort of start bubbling up into retail in the best way? And this is quite a big effort. It means building that two-sided marketplace. Make sure the payment service providers offer that Wallet Connect Pay as an additional payment method. Make sure the merchants start adopting it. Make sure the wallets are offer the best UX like SafePal, and then ultimately the end users feel like they can spend safely.
Yeah, I think all these are very positive trends and developments to see, right? Because it's very different from how maybe the industry developed, like maybe 2 years ago, for example. We see a lot more focus on very practical use cases and IRR applications. And I think this is a very positive indicator of the maturing of the industry, when users are really looking for things that they can use daily or in very familiar ways, to mainstream life. So glad to be working with Wallet Connect to sort of expand the offerings that users can enjoy together.
Yeah, absolutely.
Yeah,
maybe
awesome.
lastly, just finish in terms of chains, interesting trends of what we see with Ethereum. sort of making a nice comeback and saying, well, Ethereum sort of works. That's where a lot of volume happens. So it'll be interesting to see how how the cross-chain play evolves over time. Do we start sort of coming back onto the Ethereum chain and layer ones? So that's something to watch for 2026.
And I guess that's one of the awesome things about being a blockchain agnostic wallet suite as well, is that whatever the trend, or whichever the chain that is sort of increasing in terms of usage and volume, we'll be there to support it, as will Wallet Connect, of course.
Yes, and maybe I wanted to mention I was looking at the SafePal stats, and then Uniswap was one of the top, I guess the top DeFi app access via Wallet Connect, and it's great that you bring that experience in the wallet. I think that's a good complementary sort of work where Wallet Connect allows you to access. We had 16,000 dApps connected through 2025. Can you imagine 16,000 dApps across the whole space? But obviously that's the volume concentrated in key dApps, and for each wallet that can monitor the success of all the usage from the users, can also start embedding that technology into the wallet for better experience.
Yeah, absolutely.
Awesome. That's very, very cool. Thanks so much for sharing, Fab. Really appreciate. Before we wrap up, do you want to have some final words or just a shout out to SafePal community before moving on to the next guest?
Yeah, of course. Really good to be on the community stream. This is really glad to be working more closely with SafePal, and super excited about bringing payments to all of you.
Cool, guys. Just try Wallet Connect Pay, and thanks so much.
Pop by and say hi to Hong Kong and test out the feature.
Pop by, say hi. And maybe buy a tote bag, croissant tote bag. Awesome. Thanks so
for
much
joining
for joining
us.
us.
Thanks, guys.
Yeah.
Pleasure.
Yep.
Thanks for having me.
Have a good one. Bye.
Bye-bye.
Okay. All right. Let's move on to our second guest today. Hi, Goku. Our next guest is
Hi,
Annie.
TJ.
Yeah. What time is it over there? You sound really energetic.
I'm just trying to bring the energy.
Yeah, love it.
It doesn't matter what the
Sounds
time
like you
is.
had a really good cup of coffee. So I was very curious.
Yeah, gotta keep the pace up. I also don't want to keep everybody too long. I know anybody who's here at the end might they've already been here, so I don't want to make them feel like I'm dragging it on or anything.
Oh, not at all. I think the awesome thing is our viewers tune in every month, and they generally look forward to insights and updates. So
Cool.
Go ham with what you have to share, because I think our viewers are interested to hear.
All right.
Cool. Before we go on to the question, do you want to give us a quick intro about yourself and what you do at Annie?
Sure. Yeah, I'm Goku from Annie, the digital marketing lead. I've been sort of in the crypto space basically since 2019, a little bit before that, but barely. That's when I really jumped in a bit more. And since I'm a guest here, let me give a quick introduction to Annie. Annie's or ENI, if you're searching it, just search ENI. And then you can also see the handle up here on the screen if you want to check us on X. But Annie is a cutting-edge enterprise-grade blockchain designed with zero-knowledge proof technology at its core. And our modular and multi-chain architecture delivers a highly scalable infrastructure by seamlessly integrating the mainnet with app chains. So basically, by offloading intensive computations to dedicated ZK coprocessors, we deliver trustless, efficiency, and low-latency solutions tailored specifically to enterprise needs. Okay,
Hello?
so should I? That was sort of introduction to Annie. Should I?
Do you
Okay.
want to maybe quickly go through the slides and before we jump to the question, or you want to answer it while introducing it a bit by bit?
Oh yeah, let's go through the slide. Yeah.
Okay.
All right, no worries. Cool. Yeah, I'll talk about this slide that you have up right now. Okay, cool. So over the past few months, NE has been quietly building real momentum on chain. So as you can see by these figures here, today our TVL is consistently above $74 million. We had a peak of 77 million. And we're also seeing strong transaction activity with over $10 million in weekly volume and a stable 24-hour volume of around 600,000. But more importantly, it's not just growth in numbers. Like, these numbers are reflecting increased participation from real users and real use cases. So on the ecosystem side, we've made several important integrations. So NE is now fully supported within the SafePal wallet suite, allowing users to securely manage any assets like EGAS with a seamless experience. And we've also been listed on Root Data and recently recognized by CertiK with an A rating, a Skynet score of 81.21, which is ranking us among some of the more followed projects across their community. So all of this is sort of signaling that NE is no longer just an idea. It's already operating as a growing on-chain system. So that's basically this slide. Yeah. All right. So on the infrastructure progress and ecosystem side, I'll break this down a little bit for everybody. So at the infrastructure level, we've made significant progress in making NE more open, scalable, and ready for real-world applications. A bit about how we did that. Like, we recently completed a full restructuring of the NE Hub, along with the launch of our Bridge Hub demo and API. So NE's not a closed system any longer. We're enabling third-party developers and ecosystem partners to directly integrate on top of our infrastructure, which is steps closer to the long-term plan. So at the same time, we've strengthened our risk control mechanisms and cross-train strategies, improving both security and integration efficiency. Then on the ecosystem side, our integration with SafePal is a key step because obviously for any network to scale, user access must be secure and seamless. We've also integrated Space ID, which enables Web3 naming within any ecosystem. And that makes identity and interaction much more user-friendly. It feels more natural. And then in addition, we've launched a new DAO as a service yield module, which provides multi-token staking and incentive mechanisms for DAOs and communities. And at the same time, we're expanding our global presence. So in April, NE will be a host at the Hong Kong RWI Catalyst Summit, which is going to bring together builders, institutions, and innovators. And we'll also be participating in the Hong Kong Web3 Festival as a speaker and exhibitor, which I think you guys were mentioning earlier. So I think all of this together reflects our clear direction of not just building the infrastructure, but actively connecting that infrastructure with real-world ecosystems, institutions, and developers.
Cool. Speaking of institutions, so actually, the first question we prepare for you is, what are the fundamental barriers that prevent institutions from putting core business processes on chain, and how does NE address them? As you mentioned, this is one of the the edge of NE has.
Right. So I think at this point, institutions aren't as held back by technology as before, as technology has sort of caught up to that. So now the reality is some of the core barriers are about control, predictability, and accountability. So when institutions are moving on chain, they're not only asking how fast is the system, they're asking who controls the ledger, can the rules be changed, what happens if something goes wrong. So most public blockchains don't really give clear answers or don't give much control to these kinds of questions if you're wanting to build on them. And so I think that's where NE tries to be fundamentally different. So with our app chain architecture, enterprises can run their own independent ledger systems where they can define their rules, their data access, and their compliance logic. But at the same time, the settlement is still anchored to the mainnet. So they still benefit from the shared security and the global liquidity that they can get access to. So instead of forcing institutions to adapt to a blockchain, we're making blockchain adapt to how institutions actually operate.
Well, interesting. So, yeah, let's. I saw you still have one slide to go.
Yeah, we can hit that last slide.
Yeah, that's cool.
Okay, cool.
Do you want to go through this one before we?
Yeah. All right. Yeah, so this slide's sort of more about where ENI is heading. So the name ENI is inspired by ENIAC, one of the earliest general purpose computers. And just as ENIAC marked the beginning of computing infrastructure, we see ENI as part of the next phase, infrastructure for financial systems. So what we're building is not just a blockchain. We're evolving from a traditional layer 1 into a BaaS platform for enterprise adoption. A system where businesses can move their core operations on chain with control, with privacy, with predictability. So in this sense, if we want to get metaphorical, ENI is not just a technology, it's a bridge between TradFi and Web3, or between capital and infrastructure, or between the technical possibility and the real world execution. So this is also why we're currently preparing for a major brand upgrade, because what ENI represents today is very different from where we started as we've been building it. We're no longer just building a chain, we're building the foundation for how real world finance will operate on chain. So ENI's not just growing, it's evolving into the infrastructure that real world systems can run on.
That sounds pretty exciting. When can our users or community look forward to the brand upgrade? Because I see that it's stated that it's launching soon.
The brand upgrade?
Yeah.
I don't think I can give like a exact date on that one.
I see. The alpha is not ready yet. That's fine. So
yeah,
for any
right now,
users,
I can just say soon.
Yep. Any audience that are curious, do follow, of course, the official ENI social channels, because I think they post updates ASAP, when they're really there.
Yeah, for sure. The latest updates will always be on the X or in the other channels, but the main one is the X.
So yeah, really cool to see all the the how ENI's built different. So do you want to maybe break into more details? Because, for example, why do you believe most at layer 1 designed to fail to meet the institutional requirement, but how this the specific strategy or path that made ENI can make it, or like how it do different to
I think so. Like most layer 1s were sort of they were built more for like open participation, not for structured financial systems. So it's sort of, even from the starting point, it's like a different intent that we're coming from. So they optimize for things like TPS or decentralization and form, but institutions care about certainty a lot. So if a bank settlement has to compete with consumer apps or meme trading for block space, that system isn't going to be designed for a financial institution, right? So it's not necessarily about performance only. It's also a lack of isolation and predictability. So ENI was designed from this ground up with this in mind. Again, it's sort of the whole design is for institutional adaptation. So with our mainnet connected to AppChain architectures, and then the Hope parallel engine, we provide rigid resource isolation. So each AppChain operates in its own environment so that the enterprise workflows are not affected by what happens elsewhere in the network. So ENI performance isn't about peak speed only, it's about guaranteeing that the system behaves exactly as expected every time, so that those more structured financial systems have something that works more to their needs.
Yeah, I think those are very good points because when institutions are involved, they likely be moving a bigger amount of assets. So certainty is definitely an issue. They're going to be moving like a few $1 million worth of assets each time. They have to be confident that it'll arrive and they will be able to receive the asset with that full level of confidence. Of course, yes. Since Annie is more catered towards institutions, what are some of the top use cases that you've seen that are gaining traction, and maybe you feel would likely be foundational for the industry in the coming months and maybe year?
Just like among Web3?
Among Web3, or maybe more specific to how any chain is growing so far.
So I'd say within Web3, the big shift is moving from like a trading driven system to a more infrastructure driven system. So for a long time, the industry has been focused on like tokens, liquidity, and speculation only. But now we're kind of seeing a structural change where institutions are starting to treat blockchain as financial infrastructure, not only as a market, which can also change the nature of liquidity. So I guess for the example, like RWA liquidity won't look like crypto native markets. It'll be driven by allocation, treasury management, and long-term capital. Another key shift is that success will no longer be defined by user growth or TPS only, but like real world systems, accounting, settlement, compliance, what these can actually run on chain. So the next phase of Web3 is maybe not just about creating new assets, but migrating the real financial systems sort of onto blockchain infrastructure, or at least that's sort of a major trend that we're kind of building toward.
Yeah, I think those are all positive developments again to see. They may not be new or innovative in that sense, but they're definitely very foundational, fundamental, practical use cases. So I think they'll be very important and critical for building the foundation for a larger scale adoption in the months and years to come.
Right. Yeah, I think so.
Cool. Before we wrap up, is there anything more you'd like to share with SafePal community? Can be, I think you already mentioned some of the future plans, but it can be some upcoming events or campaigns or anything you think, should SafePal community should keep an eye on.
Well, as we mentioned before, maybe you could go back a few slides to the X handle, because that's where we're always going to be posting everything. So if I can get anybody that's listening to
super straightforward, follow Annie X.
Yeah, it would just be to follow us on X, because then we can get you noticing any updates that come up. So I don't have to just use this to get people looking at one. Just go ahead and follow us on X, and then you'll be updated with everything.
Perfect. Cool. Awesome. Thanks, Goku, for joining us today. Really appreciate the insights.
Yeah, thanks for having me.
Yeah.
Yeah, thanks for having thanks for joining us, Goku.
Annie X. Thank you.
Yeah, and check them out in Hong Kong as well in April.
Oh yeah, definitely.
Cool. Awesome. That's the wrap up for today's AMA. Huge thanks to CJ for joining us. Do you have any final words, last words for our audience?
I guess in light of the bad run of DeFi exports that's been happening to everyone, may sound cliche again, but stay safe, manage your risk with your assets, and have a great night and lead up to the weekend as well for everyone. And may your portfolios grow healthier over time.
Yeah, perfect. And massive shout out to all of our SafePal fam for tuning in, and also to our amazing guests for making today's special. If you have any crypto project you think we should feature or collaboration with, just drop it in the comment So we love to hearing your suggestion. Also, if you have any
Yeah,
idea
I think
for
we are always looking to improve as well. For I think to throw back to some of the product updates that Ash has mentioned, I think you can see we are always looking to add on blockchains, improve our features, be it niche or
Mhm.
maybe more general features. For prediction markets, I'm not a prediction markets users, but I think there's a very strong demand there, just like our perps features. So for anyone who has feedback, do send it across. I think we are always very sincere and serious about improving our offerings. And to add on to what Veronica mentioned about our new TRX staking feature as well, aside from the competitive 10% APY that I think is competes with some of the best in the industry, those are all from real yield sources from SR voting rewards and energy rental income. For anyone who's curious, do check out our blog at www.safepower.com/blog on more information on TRX staking feature for anyone who's curious. I think we covered it quite extensively there as well. Yeah. Yeah.
Yeah.
You
And
can
also
take
don't
it away.
forget to follow our X if you haven't yet. Yeah, we also have our latest update on X. We'll be back next month with more news and exciting guests and interesting stories. And hopefully, CJ next time won't have any real loss to
Yeah,
share.
maybe next time I'll have a non-negligible amount of 5-figure gains instead of losses. So I think it will be a while of the market conditions. But yeah, wishing everyone a healthy portfolio and to stay free from any exploits or any unfortunate incidents. But yeah, manage your risks. Yeah.
Stay safe. Bye.
Stay safe, everyone. Have a great night and day.
Yeah, bye.